Well, the rand opened this morning on the high R7.50. It's currently trading around 763. A little bit of an improvement, though, from yesterday's weakest level of 768. For more on the rand, I'm joined now by James Turp from Nedbank Capital. James, good afternoon.
Good afternoon, Stephen.
James, it looks like the rand really has settled into a weaker trading range at this stage and really following what we're seeing with the euro, isn't it?
That's correct, yeah. We're pretty much a passenger as far as the rand's concerned. With Greece once again being the topic of discussion, with all eyes on those huge debt to GDP ratios that country has at the moment, and as a result we've seen a much weaker euro and the rand just following on from that.
Now, we've been speaking about Greece for weeks, and every time we seem to have resolution, it doesn't appear to come. We've been talking about that 110 billion euro aid package. It still has to be approved by a number of countries, and of course Greece has to agree to all of these austerity measures. Do you think we're going to see any resolution anytime soon on the Greek issue, James?
Yeah, I mean, well, what we're seeing at the moment is, as I say, those debt to GDP ratios being officially around 125%. Those are so high. The market at the moment is concerned that they're being underdeclared and that they're actually a lot higher. So as a result, we need to see some sort of measures coming out. Fortunately, we've got the ECB meeting this afternoon, which is broadly expected to keep their rates flat at 1%, all-time low that is. And I think more importantly, as you say, we need to see some signals made by Trichet, some measures that will give some comfort to the market that things will, that Greece will be able to service those extremely high levels of debt at the moment.
Now, of course, the fear at this moment is really that this contagion could spread to other countries. We had Moody's yesterday saying it was reviewing Portugal's debt ratings. And of course, just a week or so ago, we had Standard & Poor's downgrading Portugal, Greece and Spain. So it looks like there really is a risk of contagion at this stage, James.
That's correct. We have to realize that there are some the other countries in Europe hold high levels of these countries, of Greek debt and Spanish and Italian and Portuguese debt. So as one country's debt levels weaken and then those yields increase, obviously their holdings will affect the holdings and debt level holdings of other countries in those portfolios. So there is a real risk of contagion to governments and of course to the banking sector as well, because banks are also holding debt, European debt. So there is bad news in Europe at the moment in that respect.
In the meantime, we have the euro trading at below 128 against the dollar, so it's broken more levels as it continues to weaken rather. What's the implications of that for the rand and for the South African economy?
Well, Europe as a zone is our major trading partner. As the euro weakens, our exports become more expensive to Europe. So it's negative to us, to our export industry. It's also obviously a weaker euro is positive in some respects to European manufacturers, making their exports more profitable. But we must remember Europe has no oil manufacturers there, so their imports will become a lot more expensive. So it's negative to Europe and it's negative to South Africa as the euro weakens.
Now, James, we've also seen our bond yields softening a little bit, and I would have expected our bonds perhaps to strengthen as people dumped Portuguese and Greek bonds and perhaps went for safer bonds like South African.
That has been the trend over the past few weeks and months, certainly. But I think what we're seeing in the South African yield market, the bond market, is a bit of a retracement, a little bit of profit taking, perhaps the market being caught a little bit long as yields were hitting the low levels on the 157s around the 770, and it's been a bit of a retracement. We found the bonds trading at the moment pretty much around the same levels they were after the cut of 50 basis points at the last MPC meeting. So it's a bit of a retrace on those yields back up to these levels. Where to from here? There's obviously contagion risk. There is concern internationally of a sovereign debt bubble occurring. So it will be pricing in a little bit of that contagion risk just from a portfolio perspective.
Of course, just with the rand trading at these weaker levels, it does rule out the likelihood of another interest rate cut, because it will start to push up our imported inflation, won't it?
That's correct, yeah. With Jill Marx's comments saying that another interest rate cut is unlikely for the time being, unless we see a consistently stronger rand or inflation data pushing lower. I think it pretty much we can expect no change in interest rates at the next meeting, and even in the short term as well. As she says, I can't see any move lower for the time being.
Well, the rand currently trading in the low 760s against the dollar. Where would you expect it to go from here in the short term?
In the short term, the rand range seems to be around 755 to 770. At the moment, we're seeing some exporting activity at the top, and obviously we look to seeing importers around the 755 level. So yeah, a consistent close above the 770s, you could argue technically would lead to a weaker rand. But once again, I think, as I said in the opening statement, we're a passenger really at the moment, and the market will be driven by developments in Europe.
Well, not a very happy passenger either, but James, thanks very much for joining us this afternoon.